So first of all, I apologize about that. I'm not sure how good the audio is right now. But just to introduce myself, my name is Luke Robinson, and I am a member relationship manager here at Collective. And essentially, you can think of Collective as an all-in-one back office solution for your business. Specifically a business that needs to be an S corp. So we will handle setting up your business, getting the LLC set up, making the S corp election, properly with the Internal Revenue Service, and then we'll handle your payroll, bookkeeping, ongoing tax support throughout the year if you need it. And then at the end of the year, we file your S corp tax return. So you can think of us as just kind of a factory for S corps. We'll pretty much do it all for you. But today, we're running a little session that we like to call Tax Tuesday. And essentially what it is, it's an AMA. It's an Ask Me Anything session. And you can literally ask me anything about taxes, about business formation, business best practices, best financial practices, and anything like that. And keep in mind, though, that this is just information. Don't consider this legal advice. Don't consider this official tax advice even. The tax code is extremely complex, of course, and I could be wrong in some of the things that I'm saying, or a lot of the things that I'm saying. It changes all the time, and it's a good idea to always, have a conversation with a licensed CPA, enrolled agent that knows your situation specifically before you act on any of this information. But with that being said, let's go ahead and jump right into it. Okay, well, here's the first good question, and it's, what does the process of working with Collective look like? Well, like I mentioned earlier, we essentially do it all. We'll handle the whole shebang for your business, in a tax, accounting, and payroll context. But essentially, what you would do is first, you'd speak to an advisor. Before you even signed up with Collective, we offer free consultations, and you'd speak with a tax advisor to kind of go through the details of your business to see if an S corp would even be in your best interest. That's part of our job too, is to kind of educate you about S corps and see if it'd be right for you. And then if we both agreed, if you and the advisor agreed that an S corp is the right fit for you, if Collective is a good fit for you, then you'd sign up for the service. And once you sign up, essentially what you do is you'd go through a short questionnaire, answer some questions about your business, give us some income estimations, things like that. Maybe give us a document or two. And then once we get all the documents we need from you, you would sit down one-on-one with an onboarding accountant. And that accountant will essentially go and do some bookkeeping cleanup if need be, to a certain date in the past. Clean up your books, categorize any transactions that need to be cleaned up, et cetera, et cetera. And then from there, after we kind of got things cleaned up, we'd get you on payroll, because now that you'll be an S corp, you literally will be on payroll. So that's an important element of it. And if you don't run payroll in an S corp, it could open you up to audit. So we'll take care of that part. Then we would also take over your monthly bookkeeping as well. And when I say monthly, I mean we close out the books monthly. So every month we'll give you a profit and loss statement, a cash flow statement, and a balance sheet each month of the books. And it's convenient because essentially what we do is we will electronically hook up your business bank accounts. And as long as you run business expenses through the account, accept income through the accounts that we have hooked up to our system, then we'll be able to automatically run your books, give you reports each month, and you won't even have to give us individual receipts for us to do that. We could do that automatically. But then once we kind of get your bookkeeping process underway, you'll also meet someone on your team called a member relationship manager, which is who I am. And I have a lot of other great colleagues, of course, and they will be responsible for supporting you throughout the year. They'll serve as your main point of contact, and any sort of guidance you need, business questions. If you just need some support, you can have a consultation with them. or send them an email, or give them a call, and we'll support you throughout the way. But then, after you meet your member relationship manager, and kind of as we run your books throughout the year, we'll also calculate your quarterly estimated tax deposits. That's just another part of the service, and it's something that you'll still have when you go the S corp route. And then at the end of the year, we will file your S corp tax return, because you'll have one of those now, right? Like you'll have a business return, that kind of comes into existence when you go the S corp route. So we'll file that one for you as well. So really, anything that has to do with being an S corp, or anything that's, for the most part, that's required. There are a few exceptions, but most of the things that's required to be an S corp, Collective would handle for you. And I think I saw a really good question from Nancy. Yes, the question is, are your services a la carte? No, they're not. It's an all-in-one flat fee price. But keep this in mind when you think about the price. And here is the price, by the way. I'll just go ahead and tell you the price. If you go the month-to-month route, it's $349 monthly. If you pay in full just for 12 months at a time, you'll receive 15% off the entire price for the year. So then, that drops the average down to around $296 a month if you go that route. But really, when you're looking at the price, keep the following in mind. Even if you did, let's say that you didn't have Collective, and you kind of did the S corp piecemeal by yourself, like you kind of handled all these elements by yourself with your own softwares that you find, or whatever, then keep in mind that for one, you need a payroll processor like Gusto, ADP, Paychex, some sort of payroll processor. Typically, they're $60 a month. Just in that software alone, you got to pay $60 a month. Even if you're doing it yourself, even if you're running your own payroll, $60 a month. Then, because the S corp accounting is a little bit more complicated than just the average business, you need some sort of mid-level accounting software as well. And that's usually another $50 a month, somewhere around there. So just in software costs, you have around $110 a month, just in your softwares. But still, at the end of the year, you still have to find someone to file your S corp tax return. And depending on the professional, of course, those can be expensive returns. Some professionals can charge you between $1,000 and $2,000 to even file a return like that. So when you really do the math, the price that you pay from doing it yourself is very similar to what you pay Collective anyway. And with Collective, you have support. You're not in the dark with any of these decisions. You're not in the dark with anything that you have to figure out yourself. So really, when you look at the price, it's cheaper at the end of the day, because you're getting more services, more comprehensive services for the same amount of money as if you do it yourself. Ooh, here's a good question. Why does Collective only focus on S corps? That's an excellent question. Well, for one, we're always growing, we're always evolving. And I do foresee that sometime in the future, we probably will have different type of tiers to, maybe serve a business owner that doesn't need an S corp election yet, that, might just need to stay at the sole proprietorship or, LLC level. But the reason why that we, primarily focus on S corps is because we're building a company that provides everything under the sun. And when you try to build a company like that, you have to start in a pretty specific niche of who you service. And the reason why that we're able to provide such good service for a reasonable price and, kind of rope everything in is because our clients are so similar. We want to get extremely good, almost perfect. No company's perfect, of course, but we want to get as close to perfect as we can in understanding S corps and understanding this specific type of client. Because every client that comes on with Collective is very similar to one another. We're doing, similar things for each client, so we're getting extremely good at it. But to get extremely good at one thing, you got to focus on one thing for a while. But that won't be the case forever. Collective definitely will, at some point, I would foresee, offer some other tiers for different kind of business types. Yes. Does Collective have the S Corp Black Friday deals? Absolutely. And really, the Black Friday deal is it's the biggest discount that we run all year. So if an S corp seems like it interests you, if you think the collective might be a good fit for you, schedule a call with us. Speak with a business advisor. You can talk about the Black Friday deal. What kind of initial discount that you get for getting started. You can talk about how S corps work, how collective would benefit you. Um, so, sir, we've got a Black Friday deal coming up. Stay tuned. Here's a good question. How can I write off my Black Friday purchases? Well, you can write off your Black Friday purchases if they're business purchases, if they're purchases specifically for your business and nothing else. So let's say that you just want to spend less money, get discounts on business purchases. That's totally fine. You can buy stuff on Black Friday and you can write it off. But don't write off things that you're buying on Black Friday that you're using for personal use. So let's say that let's say that there's a laptop deal that you've been wanting personally for a while. You wanted a new laptop, your old personal laptop's going kaput, and you need a new laptop. And you see this great deal come through on Black Friday and you buy it. And you're like, well, I can use this for business sometimes, and I can maybe make the claim that I can use this for business, even though primarily I'm not. I'm just going to go ahead and write it off. That's a no-no. That is a no-no. And the problem is if the IRS were to ever audit you, you'd have to explain that, and you'd have to have some pretty convincing substantiation that this is a business laptop. But with that being said, if you're searching for business purchases and want to get discounts, there's no problem with writing off the money you spend for Black Friday deals. No problem at all. What's the best way to take advantage of Black Friday deals when it comes to the tax code? Well, really, okay, well, let me put it to you this way. Really, how you could take advantage of the Black Friday deals, not necessarily when it comes to the tax code, but just by the help of your business, is simply just to get things cheaper. Is to buy some business equipment or business service or whatever cheaper than you otherwise would. And the reason why that's so good and why you should kind of probably keep the tax context out of it, don't think about taxes when you think about that, because a lot of times I'll hear people say, well, I need to find some write-offs. Like I need to find some business expenses. I'm paying too much in taxes. I want to find some more stuff to write off. I need to find it. I need to find some things to spend money on so I can write it off on my books or on my taxes. But the problem with that mindset is that you're spending more money when you do that. Because think of it like this. Let's say that you owe $30,000 in taxes. And let's say that $30,000 in taxes is due to you making around $120,000 with your business, or something like that. And let's say that you find a $10,000 purchase that you don't need. A purchase that you can write off, but that your business doesn't really need, that you're just buying simply because you want to write something off. You're buying this flashy new computer that you don't need, or you're buying this flashy new printer that you don't need, and great, you get to write it off. Now your net income is $110,000. And your tax bill, now might be, these aren't exact numbers, this is just an example. Your tax bill might be, I don't know, $27,000, something like that. Okay, great. You've saved $3,000 on taxes because you've written that off, but you spent $10,000 on something that you don't need, on something that isn't providing extra value for the business than the purchase you made previously. So it just doesn't really make a lot of financial sense to spend $10,000 in order to save $3,000. And I understand conceptually, why people would think that way. They're like, I want to write off as many things as possible. That's totally reasonable. But don't write off things, don't buy things only because of the reason that you want to write them off. It doesn't make a lot of financial sense. You're spending more money long term. Okay, Timmy, okay, here's a question. is there an LLC, S Corp, or some other entity that I can set up for a business that has zero to do with me or my income? I qualify for ongoing treatments because of a low income, but I'd like to try and be productive without putting my hospitalization at risk because of the business success, should there be any. Let me see if I understand. Let me see if I can understand your question. There's an LLC, S corp, or some other entity that I can set up. Probably not, because really, you're only supposed to set up a business entity if you intend to start a business, and that very much has to do with you and your income. And the only situation that I can see, so I can tie it in with this example. We have things called hobbies. Of course, we spend money on our hobbies. We have a lot of passion for our hobbies. We have fun, and a lot of our hobbies cost money. And sometimes people will set up a business for their hobby and route expenses through it so they can write it off. Maybe there are other sources of income and whatnot. That is not allowed. In the IRS's eyes, that's not proper because it's a hobby. It's not a business. You're not allowed, in the IRS, in a tax context anyway, you're not allowed to write off expenses that has to do with a hobby or expenses that have nothing to do with an actual business operation. So I'm not sure if that directly answers your question, but just keep that in mind when you're thinking about that. What kind of entrepreneurs does an S corp work well with the most? That's a good question, and I would say entrepreneurs that have a little bit more, especially in an ownership context, a little bit more straightforward service-based business. That is typically the sort of prime type of entrepreneur that needs an S corp. Because like when you're thinking about S corps, keep in mind that there are a few restrictions on them, and there's a few things you can and can't do when you have an S corp. And one of those restrictions are restrictions of ownership. You can only have up to 100 shareholders in the business. An S corp can only have up to 100 shareholders. So if you're involved in fundraising or a lot of, let's just say for whatever reason, you'd like to issue stock in yourself and have thousands of people own a piece of your business and whatnot, an S corp election isn't for you because there's restrictions on that. And so that's an example of something of a type of business that doesn't work well with. But that's why I say kind of a little bit more straightforward service-based professions, single ownership. That's usually the prime person that needs an S corp election. Typically, not always. Good question. Here's another excellent question. Why does an S corp seem like a tax loophole that people don't know? Well, first of all, just to be clear, and I say this as an objective fact, this is not my opinion, this is not someone else's opinion, this is a statement of fact. The S corp is not a tax loophole. That is false. That is incorrect. The S corp election, a subchapter S small business election, is part of the tax code, directly, concretely, and straightforwardly. It is not a loophole. The definition of a loophole is an unintended consequence in a body of law, whether it be tax law or not even law, maybe even procedure, anything. A loophole is an unintended consequence of events based on written law. That's essentially what a loophole is. That is not an S corp. An S corp is objectively part of the tax code. It has its own tax return. It has its own form to elect the S corp tax status. But the reason, and I totally understand why people think it's a loophole, because you save money with it, right? It's like, at what times do the government really allow you to save a lot of money without it being a loophole? And because usually, when you're saving a ton of money by something the government allows you to do, it's usually because it's a loophole, right? I totally understand that mindset, but that just doesn't apply to the S corp. And this is kind of where the S corp came to be, and kind of why the S corp is around, in my opinion. Keep in mind that The entire reason why you want to make an S corp election is to save on the self-employment tax. That's that's really that's not necessarily always the main reason, but it typically is. It's typically the main reason. Self-employment tax, like it's a tax rate of 15.3%. Now, that 15.3% is literally another word for Social Security and Medicare taxes. That's what the self-employment tax is. So when you work a W-2 job for somebody else, you still pay the self-employment tax in effect because you pay the Social Security and Medicare tax. And it's even the same tax rate. Like it's even 15.3% on your salary. But the only difference is your employer pays half. Whoever is giving you a job, whoever's writing your paychecks, they are paying half of your Social Security Medicare tax or the self-employment tax, whatever you want to call it. So this is what happened. Let's say that you compare two people that are making $100,000, and one person making $100,000 is a W-2 employee. That's one person. The other person that's making $100,000 is a business owner. Without that business owner being an S corp, that business owner pays a lot more in tax than the W-2 employee does, because there's no employer to pay half of their Social Security Medicare tax for them. They're themselves, like they are the employer. So there's no one else to provide that Social Security Medicare tax support. So they thought that was unfair, which it kind of is unfair. It's like why is someone that's making exactly the same amount of money as someone that's employed, but has more responsibilities and more risk, why are they paying more in tax? And people went to Congress and made an issue about it, to where taxes are too high at a self-employed person of my magnitude and my stature, and at this income level. You're going to have to cut me a break, Congress. Like, you're going to have to cut me a break, government. So they responded with creating the concept, or not the concept, but with the structure and law of the S corp or the S corp election. And they say, okay, we hear you. You're not this big business with with a suite of owners, a C-suite of owners, tons of employees. We'll give you a break on how you choose to pay this tax. So that's where the S corp came to be. Oh, Wild Fern Weddings, I love it. Loves working with Collective, and if anyone has questions, reach out. Thanks so much. Can a partnership be an S corp? Yes, a partnership can make an S corp election. And essentially, the only thing a partnership is, well first, let's talk about how that works. A lot of people, like when they hear the word S corp, it brings up some confusion, because it's not a corporation, believe it or not. An S corp is not a corporation. It's not a business entity by itself. Like, it's not a business structure. It's a tax election. It's a way to ask the government to tax you in a certain way. So in order to become an S corp, you have to be some sort of business entity like an LLC before you can even make an S corp election with the IRS. So in other words, yes, a partnership is just essentially two or more people on an LLC. That's how you describe a partnership. That's literally what it is. And that entity can make an S corp election. Absolutely. Can you go through an example of how exactly an S corp saves you money? Yes, I can. So let's just do some calculations here. Like I mentioned earlier, one of the big reasons why you go the S corp route is to reduce your self-employment tax. That's a big reason. And the self-employment tax, it's a flat tax rate. It's 15.3%. Before you become an S corp, a huge chunk or all of your net income is subject to that full 15.3%. So let's use $100,000 as an example. Before you become an S corp, how you calculate your self-employment tax is you take $100,000 and you'd multiply it by 15.3%. All of your money is subject to it. What happens with an S corp election, though, and that's paperwork filed with the government. It's filed with the IRS. But essentially, what happens is you become a W 2 employee of your own business, of your own operation. And you're still the owner, of course, it's still your business. But for tax purposes, you literally become an employee as well. And now that you're an employee, you'll pay yourself a salary. Your business will literally pay you a wage, just like you'd make if you work for someone else as a W 2 employee. But the advantageous thing about S Corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount. So, for example, let's say that your business is making around 100 grand, but let's also assume that you're paying yourself around like a $40,000 salary, something like that. And now with the S corp, it's only the salary that's subject to the self-employment tax. So that first 40 grand is still subject to the 15.3%, but the other 60 grand is not. Those are considered distributions to yourself, and it's just simply no longer subject to the tax. So, assuming that you make that much money in total, an S corp saves you, I believe that's somewhere between $9,000 and $10,000. I think that's around $9,200. So once you reach a certain income level, an S corp can be quite advantageous for your financial health. And unfortunately, I'm going to have to end this session. It's 1:30, and I actually have to go and support some collective members. But please, like I said, if you've enjoyed this talk, if you think that S corps might be in your best interest, schedule a call with us. We'd love to have a conversation and